Hey everybody, welcome to the morning market briefing Thursday, May 14th, 2026. Hope you are doing well out there. Let's open up with big mover in Cisco, Ben. Seeing massive AI numbers coming through. Seems like the street potentially a little light on their expectations of Cisco.
Yeah, I mean, for them to get double-digit revenue is something that we never thought they'd be able to do again, and they're doing it. So, I mean, the numbers aren't as gaudy as we see from a lot of these other AI companies like NVIDIA or AMD or any of these AI businesses that we're talking about. But relative to expectations, they're a step change. And the thing about Cisco is that they came out with the Silicon One product, which is their own silicon, and it never really took off, at least for the first couple of years. And they kept saying, well, we'll get to $100 million in orders and $200 million in orders. And it seemed kind of fanciful. And then it was slowly dripping through, even while NVIDIA was selling all these chips. But what we've seen in the last quarter, really, I mean, it is just a quarter, is that the demand on the networking side has skyrocketed. And it's from the hyperscalers, and it's from even on the campus side. And I believe this is a function of not just Cisco in the data center itself, although they're benefiting from that, but I think that it's also a function of what we're seeing with Anthropic, is now that people are using this and using inference, this is where Cisco's benefiting. And I'm guessing, and it seems like it, when these companies are training these LLMs and doing all of that process, NVIDIA was selling a lot of chips, but none of these other ecosystem players were benefiting, whether it's the power guys, the inference guys, or the network connecting. But I think on the inference side, now that people are using AI,
There's so many more applications.
Exactly. And I think that this is resulting in more demand for Cisco, both on the networking side and also on the security side. And I do think that security might be the next leg in the AI story. We're not seeing a huge benefit there. In fact, a lot of security stocks are down because they think that you can just AI your security, which I think is I see our compliance officer shaking his head right now. Yeah. And so Cisco's benefiting from all of these trends, and good for them. And you know, they're going to grow, and they're going to continue to grow for the next fiscal year as well.
Stocks up over 15%. Pre-market was up more than 2% yesterday, looking at like an 18 and change % move in the last 24 hours. Tom, we were talking about Cisco stock and like the history of it. Some wild data just on the performance of this as it relates to our lifetime.
Yeah, I was extolling the virtues of Cisco yesterday to the young boys, but when I was in 7th and 8th grade, it was during the dot-com bubble, and we just got the internet, and two, you could just on the internet have a pretend stock portfolio, and so we were doing the stock game. Perhaps the first time that was ever done in history. Online.
Yeah.
And Cisco was definitely Cisco and Amazon were the hottest stocks on the planet. Like every 7th and 8th grade boy knew what Cisco Systems was and what they were doing, which is probably a great sign of a bubble. If people didn't know,
yeah.
If I knew what Cisco Systems was doing, and I would check their stock price online and also in the paper.
Yeah, it's too late to buy.
As you did back in the day, checking paper.
Oh, yeah.
And the wild thing is, so I was looking at it yesterday. So it at the all-time high was $77, and that was in March of 2000. So I had not yet turned 15. I would turn 15 in December of that year. And it didn't hit 77 again until November of 2025. So call it 3 weeks before I turned 40 years old. I mean, it has perpetually been between $40 and $60 for a full adult lifetime, longer than half the young boys in the office have been alive. And it's going to open today
at 117.
Yeah, 117, which is insane. So, but it's crazy that it's like, I mean, sure, like they bumped the dividend and you've made a lot of, I mean, people haven't lost money by owning it, but it hasn't been a huge winner. But if you look at the total return from 2000 to now, almost all of your return has come in the last 15 weeks, which is insane.
Yeah, the 1 year return is 60%.
Yeah,
and that's prior to the 15% move this morning. So I mean, it's not booked in there, but
it's like kind of it went from being like the world's hottest tech stock to being the bond replacement in the tech world. It's like, oh, I want to have some less volatility, but own a tech exposure.
In a lot of ways, I would argue that Cisco was kind of the poster boy for the dot-com crash. And that might sound odd because so many companies were fraudulent and went out of business and never made it. But Cisco was one you could actually point to.
Yeah.
And say, it's so crazy because this thing ran into the 70s and then it took 25 years for it to get back there. And in some ways, that the durability of that story resonates a lot more with people than, well, there used to be this poop.com IPO and the stock was trading for hundreds of dollars. And so like that just doesn't resonate. You're like, okay, this thing that used to be that wasn't around that I never knew about isn't there anymore. Big deal. But when you think of a Cisco story, I think sometimes it almost frames it better.
Yeah. I mean, think of all the companies, like some of them still exist that were really hot, like Earthlink, which bought MindSpring.
Mm-hmm.
Yeah, like Earthlink still exists. I think they're technically kind of in like the cable space now. Like they're like a poor man's Comcast.
Yeah.
I mean, there's a zillion companies like that. I mean, even you go back and look at like Nokia. I mean, like when cell phones came off,
Man.
like me a little bit more than you, just because like even though we're not that far apart in age, I am like 2 years older, and straddling there was no internet, was no cell phone world, and then being where we are now, like we were the last of the people to be like have your
we know what it was like to
your-
not be online.
your hard drive turned on, and
Yeah.
you remember going to the movies but without a cell phone, and you had to call or look in the paper to see what time the movie started, and then hope that you went to the right theater because you had to kind of remember in your head which one it was.
Yeah.
And there were so many more theaters, and they were all across the street from each other.
Yep. Yeah, right. Nope, I'm over here.
So you'd have to run across a 4-lane highway to get to the other one if you were at the wrong one.
Man, you big city boys.
Man, it was tough.
One theater in my town.
Yeah.
Well, the two theaters now, one is a storage unit. I'm thinking specifically of what used to be called Merchants Walk and Merchants Exchange.
Yeah.
One is a Whole Foods in East Cobb, and the other one is a storage unit.
Yep.
But that used to be the two. And then
And
for
they
a long
built
time,
the theater at Merchants Walk. They just built it like over in the side.
Yeah.
And it's much smaller.
yeah. So those were the two big ones.
Sometimes because you didn't have a cell phone and because you weren't like you didn't want to open the telephone book to find the movie. Sometimes it was just like, oh, if you're out, Mom will just swing by the movie theater and look at the.
I mean, what's
Yeah,
real
that's
wild is like I remember friends' phone numbers from elementary school, and they were just 7 digits. You didn't do an area code. I think that was probably more a regional thing, just being in East Tennessee, where
Well, that happened here, yeah.
where
'Cause-
everyone was 865. But so if I wanted to call Brett, it was 481-8862. Like that was it. Like there was no.
Yeah, we had everyone was 404, and then after the Olympics, they split into 770. So then it became long distance to call my grandma because she was inside the perimeter and we were not.
It's crazy.
Yeah, so that became like an issue because it was like, oh, you can't call grandma because it's long distance.
Welcome to 90s history.
Yeah,
With the
so-
boys. 30 ships going through the Strait yesterday, Ben.
Yeah,
a
that's
nice
according
number.
to the IRGC, and they're
So
not.
who knows, really?
Yeah, they're not Iranian, but we did see Bloomberg actually come out with a story saying that there are ships going through, and they said this is surprising. Why is this happening? And I do understand that this is surprising. Why is this happening? I'm not complaining about it.
Yeah.
I'm curious to follow this story more. It's not having an impact on markets right now. Oil is basically flat.
Well, it would certainly align with the timeline that Tom alluded to earlier in the week in terms of, they're just going to collapse. They got to get this oil out.
And I think, yes.
And there may not be a formal announcement or a policy change, but it's like we got to start shipping some of this stuff off.
Notably, though, it's not necessarily coming from Iran.
Yeah.
I think the blockade's still in place, and I think that this is, hey, we're going to allow all these Kuwaiti and UAE and Qatari ships to go through, and hopefully the U.S. will unblockade us. Maybe. I don't know. This was a very interesting story. Again, it's not having
There's
an
not a
impact
lot
on
of
markets.
context.
There's not a lot of people talking about this, but I do think it's something that's worth watching, especially as Trump and Xi are meeting right now.
I mean, they're not. Yeah, Iran is not folding, but they're checking.
Yeah.
They're seeing if we raise.
Yeah.
That's kind of the move. Like they don't have a strong hand, but they also don't want to fold. They're already pot committed.
Yeah. Trump, as you alluded to, Ben, meeting with China, did invite Xi to the White House in September. So September 24th, mark your calendars. That will 100% get moved. Doesn't matter why or how, but that date will change. That's the one thing I'm probably most confident about. But according to the U.S., pretty productive discussions. Musk said it was wonderful. Jensen Huang said meetings went well. and Tim Apple gave a peace sign. So
Nice.
Mr. Cool retiree.
Yeah.
He's cool. Any takeaways from the reporting that we've gotten so far that seem noteworthy?
Seems like a lot of the reports I'm seeing are glomming on to Xi pressing Trump on Taiwan, saying we got to be on the same page here. And they're saying this is a big source of tension. They're going to go after Taiwan. I think that it's a lot bigger than that. They touched on a lot of issues. And yes, the press is going to report that, but also we have a board of investment that's going to be set, or that's potentially going to be set up, which will allow China to invest in sensitive sectors without going through the full national security review process. They're also discussing a $30 billion tariff cut. So I do think that there's, and China agreed with Trump that the Strait of Hormuz must remain open, and although they're not really going to help clear it. So, but I think that in general, this is a positive meeting. It was a 2-hour meeting, and now you got all the execs there, and they're going to be meeting with their people. And I think this is a good thing than any alternative. And I think that should be taken as such. And when you combine that with what's happening in the Strait, I think that's good news.
Yep. Scott Bessent was on CNBC commenting on Warsh and other topics, saying, hey, I think we're probably going to get a couple more hot inflation numbers, which I think we would like to think we've seen the hottest, but I think we would generally agree with that assessment that we're going to see some higher prints, and saying that he thinks Warsh is in a good position. Any big takeaways from Scotty B?
Yeah, I think that, he's got to be doing a little damage control. So yesterday, also something that hasn't happened in a long time is the 30-year auction went off above 5%. That was the first time since 2007. We've briefly been above it, at a number of times over the last 5 years, but that was the first time the auction had actually done it. There's a tail. It didn't go well. People are really worried about the long bond. I continue to think it's an opportunity of a lifetime, just to kind of lock in on,
You can
lock in for such a long time, and the math is so in your favor.
On zeros, you can get over 530 on a 20-year now.
Yeah, I bought some with I think it was a 3.5% coupon at 515 yesterday, and they were 2050 maturities, so they weren't even 30 years, but they were, juicy. I think it's an opportunity. I think he's got it under control. He is the world's most important bond salesman right now, so he's got to be out there leading the charge. I think Kevin Warsh getting through easily was kind of as predicted. I think there was more headlines about that than there was reality. And, I think
it was what? Party lines plus one Democrat?
Yeah, and I think that we've got to see Kevin Warsh sell the idea that rates need to be cut, and he needs to do it correctly. And he did that a little bit during his testimony. He talked about inflation being caused by money printing, and then the idea that QE the first time was to fight deflation because the whole economic landscape was collapsing. Everybody's homes were going down by 40%, and that was deflationary, and they needed to cut rates and print money to keep it from going negative, and that led to a decade of zero inflation. But then when we already started to see inflation go up, we then printed $2 trillion in additional dollars, and then we pushed inflation to 9. We were actually fighting inflation by throwing gasoline on the fire, whereas in the financial crisis, we were throwing gasoline on a wet, barely smoking pile of leaves. And I think he understands the fundamental difference. He talked a lot about making sure the data was correct, updating the way that we look at data. If we could just do that on housing, we would see very quickly that while inflation is up from an input cost with gasoline and oil going up, on the whole, it is down, and it's actually, we're in a net restrictive position, and we could see better economic activity, certainly velocity of money, if we started to cut rates, and it would help people out a lot, I think. And we need to have that nuance, especially if you want to save the housing market from collapsing. The best way to do it is to get rates down, because then people will start transacting, and that's going to be the business of the U.S. is the housing market. Regardless of all of the things we talk about with Cisco and AI, that's what drives the market. And right now that is dead. And we don't really have a good way of getting it out of where it is right now without some sort of intervention, I think, from the Fed.
Yeah, there's just not many toolkits, not many tools left in the kit that are available to do that. I mean, you think of all the things that have been done on the housing side to try to increase access, whether it's first-time homebuyer housing credits, all of these things. It's like we've tried all of these things,
We need
and
that
arguably
transferable
we've done
mortgages.
them at poor times. The transferable mortgage that we were talking about probably, 12, 18 months ago,
That's the best. The
makes
best idea.
all the sense in the world to increase activity.
Get it done.
I'd like to see that back on the forefront. Ben, we got retail sales coming through. Not sure if you've looked at that. I have not, but
It's
I
about
saw
in
it.
line.
Yeah, it's pretty much nothing really there.
So deceleration from last month, although most of the deceleration is just because people have adapted to the higher gas prices, so we're not seeing as many sales at gasoline stations versus what we saw last month. I think it was up like 20%, because simply because of price. This month it was up 2%. So we saw some deceleration on the headline. Ex auto, ex gas were about in line. We had an upward revision, and it came in a little bit better than expected. Big things that were positive does seem it's like bifurcated. So on one hand, you're seeing people buy less furniture, fewer building materials, less apparel, less general merchandise. On the other hand, you're seeing higher sales at non-store retailers like Amazon and restaurants and bars. So I don't know if there's some weird year-over-year number on this or even month-over-month, but I do think that's what we saw in the month, and people are reacting to higher interest rates and not investing in their homes or buying furniture, or taking out HELOCs, and they're not even buying as much apparel. But we've seen that from a lot of On was down, Nike's been killed, Lulu's been killed, Gap's been killed.
Allbirds turned into an AI company.
Yeah.
All of these guys are
The apparel
getting
company's
smashed.
been, that's not a new story in some ways.
And it's not because people don't have the money. It's because, do you need a 15th shirt?
There was a really dumb article in the Wall Street Journal yesterday about it was like Nike is losing out on China's 4 billion feet or whatever.
Yeah.
It's like a really weird headline, but basically Nike is now getting into the Instagram ad shoe game, it sounds like, because they have like 15 new shoe startups that are market correcting Nike. So Nike, breaking news, continues to be an absolute garbage
Wake
stock.
up, and they're waking up.
Yeah.
I thought that was such a dumb headline. I'm like, okay, when Nike starts selling shoes by the foot, then we can start maybe talking about that.
Yeah.
But this is so stupid. Someone's trying to be a wise guy, and it does not come off well.
Fruit by the foot, great.
Now that we're in on.
Yeah.
I feel like RFK's banned that big time.
Yeah, it's definitely not, doesn't have what we had in it back when we were going to the movie theaters.
Yeah, the good old days. All right, cool. We'll wrap it up there. We'll be back tomorrow morning for Friday, and talk to you soon.